Hello, everyone. Welcome to the Final Bar here on Monday. We're going to break down the market from three directions: top-down macro, the big picture themes that are playing out in the markets today; bottom-up stock picking. We'll look at some individual stocks, things like Tesla, Schlumberger, some of the banks that are on the move today, and how these moves fit into the big picture trend, and also sector rotation. We'll talk about financials and energy at the top of the list, consumer discretionary at the bottom today. Ladies and gentlemen, this is the Final Bar. Hello, everyone. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny Redmond, Washington. Thanks for joining us every weekday after the close as we break down the activity in the markets using the power of technical analysis, using the technical toolkit, the power of stock charts to better understand what's happening around us. I always talk with investors and with our viewers about increasing your market awareness. I think investors spend a lot of time speculating on what should work, what could work, what may work. At the end of the day, all of that, to be honest, is more water cooler talk. That's more of just debate and healthy discussion that we love to do as investors. But in terms of what actually helps your portfolio, I would argue it's best to focus on what is happening. What charts do is they tell you reality. They tell you where shares have changed hands. They tell you what prices investors are willing to pay, where they're willing to buy or sell different stocks and commodities and other assets at any given time. And that is reality. That is fact. And that's what you can chart over time to better understand where the trends are evolving. Now, these are choppy, uncertain times for sure. I feel like 2022, that has been a way I've described many trading days. Today, we get a nice bounce to the upside. Friday had a nice recovery move going into the close. Today, following through in the morning, but sort of chopping around and settling in to a steady state in the afternoon. What does this do to the long-term trends? We'll look at a bunch of charts here starting in a few moments. They want to let you know about the upcoming schedule here on the Final Bar on Stock Charts TV. We have one guest for you this week on Tuesday, John Kosar from Asbury Research. John has a proprietary model called the Asbury 6, which I think is really well done. So we'll see what it's telling us about the current market conditions. Next week, we'll take Monday off for the market holiday for Memorial Day. We'll come back with you with some guests on June 1st. Dave Landry. And then on the 2nd, Jay Pettit from Charts Avenue joining us on the show once again. Let's continue on with today's market recap. Let's break down what's happening in this market environment. And again, Stock Charts has so many great capabilities to help you try to understand what's happening. Let's look through some of the charts together and see what conclusions we can draw. The S&P 500 up almost 2%. Now, most of those gains came in the first couple hours of trading just into lunchtime Eastern. From there, it's really sideways. So this day had two different phases, much like Friday almost had three different phases, right? You had the sell-off in the morning, the sort of lunchtime sideways move, and then a rally into the close. Today was sort of a two-party. You had the big move out of the open, really pushing to the upside, where it felt like the S&P was going to close up 5% or something if that pace continued, but then things settled in and we hit a bit of an equilibrium state. So now we've settled in around 3970 or so. That's where investors thought the aggregate stocks that comprise the S&P 500, that's about where those things should be trading. Let's see what happens through the remainder of this week. Now, the NASDAQ underperformed just a little bit, but not too much. The NASDAQ composite was up 1.6%. Mid caps and small caps both up only 1%. So underperformed the S&P 500 by a pretty good clip. And the VIX is back below 30, just above 2840 at today's close. Interest rates move higher through the course of the day. Now, 10-year yields are still below 3%. It's currently around 286. 30-year yield, the long bond yield remains above 3%, around 307. The dollar index coming off again. And it's interesting, as I was reviewing charts as part of my morning coffee routine this morning, I was going through some of the global markets and some interesting moves in things like Brazil. And to be honest with you, developed markets as a whole. If you look at the EFA, which is the EFA ETF, sort of developed Europe and Asia, you can see this nice rally there and outperforming U.S. markets here recently. Now, a lot of that could certainly be attributed to a weaker dollar environment. With the dollar super strong, certainly speaks to strength in the US. Dollar weakening makes things look a little bit differently. Commodities overall doing pretty well. Natural gas price is really the story. If you look at the ETFs that we track, our top 8 commodity ETFs, gold and silver essentially flat to up a little bit, and energy stocks doing very, very well. Cryptocurrencies all rolling over. Now, a little bit ago, when I start preparing for the show a couple hours ago and just starting to look at some charts and thinking about where we're going to go, I'm ready to talk about, how cryptocurrencies are hanging in there. The picture has just changed rapidly. There's nothing more fun than the picture rapidly deteriorating just as we're about to go live and thinking about how to portray things. So we'll certainly look at the charts of Bitcoin, maybe Ether, and see what's going on here with this big deterioration. I haven't looked at the news to see what may be causing that, but from a technical perspective, we'll cover all the bases that we can. Now, if you missed Friday's show, I would certainly encourage you to do so. In any environment, hopefully a weekly wrap show is helpful, but especially now where there's so much confusion, so much noise during the week, really helps as part of your weekly process to look back at the last 5 trading days and just try to understand how things have evolved. So if you missed that, I would encourage you to go to StockChartsTV.com and watch Friday's show, because it was a great summary of sort of where we're at and how the noise of last week netted out to the movements in the S&P 500. The S&P making yet another closing low for the week on Friday. My market trend model on all 3 timeframes remains negative. So while the bounce today is certainly a nice bright spot in the morning, overall, let's focus on how that fits into the long-term trends. And we look at some of the charts of banks like Bank of America, like Citigroup a little later in today's show, you'll see what I mean. Nice rally, nice move off of the lows. Is it a dramatic, everything's all clear? Not even close, right? We need to see a lot more improvement to really make that sort of declaration. Now, the daily chart of the S&P 500, I think, tells you a lot about what we could be expecting here. A number of people, by the way, in our mailbag on our YouTube channel made a comment about Friday. I didn't really talk a lot about options expiration. And to be honest, I'm not an options guy, so that's not one of the main things I look at. Anyone that trades options, they will tell you a lot about how important expiration day is. Futures, any of those things where you have that roll, right? We have that time of the that particular time each month where things expire and you need to re-up your bets, essentially, if you want to keep a particular bet on. And as a result, there tends to be a lot more volume, tends to be a lot of fluidity to the markets. That happened on Friday, overall netting out to the week turning negative, but essentially a choppy day on Friday, netting out to a flat close right around 3,900. Today, the move higher is pushing us towards 4,000. And if you look at the chart of the S&P 500, you can see from Friday and then into today, we've essentially bounced off of that Fibonacci level, right? And that Fibonacci level here in the horizontal line in purple is from 2 different time frames. And we call this a confluence of support. A confluence meaning there are a number of different techniques or time frames which all sort of come to about the same conclusion. And that's always interesting, right? When you have one indicator or one chart that tells you something, that's interesting. When you have multiple indicators or multiple techniques or multiple timeframes that all sort of settle in at right around the same price level at the same time, a lot of times that can be a little more meaningful. So this is 2 different Fibonacci levels. And the main one is a 38.2% retracement of March 2020, that March low, to the January 2022 high, 38.2% of the way down. It's right around 38.10, it's really about 38.15 or 38.20 for those 2 levels. Are right about the same. And on Friday, we traded on an intraday basis right down to that point and rallied up into the close. So I am not surprised, super not surprised to see that. I would not be surprised to see a further bounce off of those levels because so many have bet on and have assumed that you would find support there, myself included. That's encouraging on the tactical time frame. Where it becomes a problem is if we would go down and fail there, because that is sort of the last level, right? That's the big one. That's one that so many of us have keyed in on. If that fails, then what? Then you have people going and giving further downside projections. That's when the market can really deteriorate very, very quickly. So I would keep a keen eye on that 38.20 sort of range. Just very quickly before we move to our next thing, and I mentioned cryptocurrencies, particularly Bitcoin, and I did want to highlight what's going on here. So today's move, we have that rollover to the downside in the last couple hours. That's just this little blip here because we're looking at the last 2 years, right? So when things get crazy, when things get choppy, it's important to understand the short-term dynamics, but it's even more important to understand how they fit into the big picture. So a couple quick observations on the chart of Bitcoin. If you take the low from September of 2020, now why did I pick that one? Because that was 10,000. That was a pivotal price level. We failed there in the summer of 2020, pulled back. We broke above it in the summer. We then pulled back and tested that from above in September, and then pushed higher to go up another 6 times up to 65,000, just below that, which was the high in the second quarter of 2021. We then sort of have this series of rotations, and if you look, a lot of these Fibonacci levels, taking that low from 2020, the high from early 2021, has played out. Now that last Fibonacci level, the 61.8% level, was right around the lows from May, June, July 2021, and also just above where we're at right now. So we've broken down through that same level. We're now testing it from below. The reason why I'm showing this is because if you want to get excited about Bitcoin, you really want to see it get above that level, because that would tell you that this is not a breakdown, that prices have stabilized, and now we're starting to see a rotation higher. We are also right at this big, thick blue dashed line, which is a big round number of 30,000. I've highlighted big round numbers, 30, I missed 50,000. Sorry about that. But if you put that on there, 40, 30, 20, look at how often prices have bounced around these key levels. Those are important ones to watch. So we are at a confluence of resistance. You need to see Bitcoin get above really 31,000, which would take us out of this consolidation zone and back above potential resistance. Until then, I think this is a chart where the path of least resistance appears lower because you're failing to hold support. It's a concerning development for the chart of Bitcoin for sure. Our next segment is called Sector Setups. We talked about the big picture overall, the S&P bouncing higher this morning, but let's think about it within the context of the trend. I think this is more about bouncing off of that 38,000, not 38,000, 3,800, excuse me. I'm looking at the wrong chart as I'm talking about another one. That's a technical analyst fumble. 3,800 on the S&P 500, bouncing off of that and showing some demand. Let's look at the 11 S&P sectors and think about how they're moving relative to one another. Now, we start, as always, with the relative rotation graph. Julius DeKempener, who's part of the StockCharts crew, did a fantastic job creating this and really promoting its benefits over a number of years. I've followed Julius and his work for a long time, and his show Sector Spotlight does a great job explaining this methodology and demonstrating its value in understanding rotation. He really came up with a visual way of representing what so many of us understand as a truth in the markets. The markets are cyclical. Sam Stovall did a fantastic job decades ago writing about the cyclical nature of the business cycle, of the economic cycle, and how sector movements relate to that. Here we can see how the 11 sectors are rotating around the S&P 500 there at the crosshairs. Look at how things are playing out. Energy remains the strongest, and it's been chopping around. It's been rotating around a lot, but it's all been doing that far to the right. Farther to the right means it's outperforming, and this vertical stuff is just sort of showing you the cyclical, the short-term movements as it has its fits and starts. It has moments where it emerges in strength, moments where it pulls back a little bit. Overall, the long-term relative story remains very strong. You can see that by the fact that if you look at the year-to-date returns of any group of sectors, and energy is included. Energy is by far the outlier to the very top. And then it's kind of everything else that's flat to down essentially year to date, or in that, sort of description. So after energy, which has clearly been the strongest longer term performer, what else is showing signs of strength? Utilities, number 2, actually making an interesting left turn and heading once again northeast over the last week. Consumer staples, which are actually showing renewed strength, heading northeast. After that, it's sort of a mix of healthcare and materials, both of which, again, remain in the leading quadrant and moving up. So if you look, 1, 2, 3, 4, 5, 6, 7 of the 11 S&P sectors are in the leading quadrant. Now, if the S&P, if this is all based on relative strength around the S&P, which is here, how can so many sectors be on the right? The reason is because there's a lot of market cap in these 4 sectors to the left of the zero line. Financials is a pretty decent size sector, and you can see it's been underperforming here as a lot of the banks have been struggling to make up some of their previous losses in 2022, but it's heading in an improving direction, right? It's still in the lagging quadrant, but getting better. After that, you have technology, consumer discretionary, communication services. Out of these 4 is certainly the most improved and the most encouraging, I would say, out of those 4 sectors. However, it remains that essentially the 7 sectors to the right here basically balance out the weakness in the 4 sectors to the left. These are the FANG sectors and plus financials, which are the ones that have been underperforming over this longer term time frame. As we think about value over growth, which I think has been sort of the overarching theme to this market for the last 6 months, really since November of last year. If you want to get a sense of when that picture is changing, I would be looking at something like the weekly RRG to see when these things start to rotate a little more. At this point, it's still very much favoring defensives and cyclical sectors, the value stuff versus the growth-oriented sectors, which are off to the left of the zero line. Let's go to the 11 S&P sectors using our candle glance functionality. The candle glance function is essentially taking a list of stocks or ETFs, putting them up on the screen in these little thumbnail sketches. It's such a fantastic way to just look at a group of things and try to see what looks good or bad relative to one another. What are the outliers? What looks stronger than everything else? What looks weaker? It's a great place to start your analysis. A big part of my morning coffee routine is starting looking at this sort of picture of global ETFs or equity indexes or sectors or industry groups, and then drilling in further when I see something that's worthy of my further attention. So what is really struggling here? What are the sectors that are trading below two downward sloping moving averages, meaning it's below the 50-day, below the 200-day, and both of those moving averages are going downward? Starting in the upper left, I would say that describes communication services, which has been, and it's not even close, the weakest sector for quite some time here, being in an established downtrend for about a year now, right? After that, we have consumer discretionary, very much in a position of weakness. Financials as well, below two downward sloping moving averages. Healthcare technically fits that, although it's sort of a weird configuration, whereas these other ones, it's the price going down, the 50-day sloping downwards, the 200-day moving average. This one's a little bit of a different sort of choppy environment just because of the choppy nature of healthcare. So I don't know if I would describe that the same way. I would say industrials looks very much like that pattern of distribution, certainly technology as well. Then real estate, right, where the 50-day is just crossing below the 200-day, potentially this week, giving the dreaded death cross or the dead cross. So what does that mean for some of these sectors that have been in established downtrends? Well, the challenge is, right, they're not showing enough signs of strength, but what you look for are signs of stability, right? I would tell you that the three goals of a technical analyst or of a technically oriented investor, in my opinion, is number one, identify trends. The trend is down. Number two, follow those trends. We have certainly been following this downside trajectory in communication services for quite some time. But the third piece is to look for signs of an inflection point. Look for signs that things may be starting to improve. What could be interesting on the chart of communication services? Well, we've put in a bit of a higher low, granted on a tactical time frame, but it's something to watch for. The relative strength is no longer going down, making a new low. In May, it's actually trending to the upside. That might be something to watch as well. Let's add the RSI in here, and we can see that in late April to early May, the sector's making a new low. Oversold on the first attempt, not oversold on the second attempt. That's a bullish momentum divergence. Now, you have had some of those on the way down, right? So January to February to March, you had that same pattern. We bounced quite a bit, but in the end, it resolved to the downside. We could be setting up at the very least for that sort of move. And when that happens, key in on the 50-day moving average. That's where a lot of these previous rallies have stalled. That may be a good upside objective if this sort of recovery that we saw on Friday continued on into today. That goes further in an area like XLC improves. Look for that rally to potential rally to the 50-day. Let's take a quick commercial break. We'll be back with my next segment, Shifting Stocks. We'll see you in a minute. Hey, everyone. Welcome back to the Final Bar. Thanks so much for joining us every weekday after the close as we break down the activity in these markets using StockCharts.com. A couple quick announcements before we get to my next segment, Shifting Stocks. First off, we would love to hear from you. We welcome your feedback on our show, on your host, on any of our guest commentators. All of that is super valuable, but we most like to hear your questions. What are you running into as you're trying to navigate these markets? We're here to try to help point you in the right direction, particularly questions on technical analysis, on market history, market dynamics, behavioral finance, whatever it is. We'll do our best to answer your questions. Our email is thefinalbar@stockcharts.com. We're on Twitter @FinalBarSCTV. We're on YouTube. Just put a comment below the video you're watching on our Stock Charts YouTube channel. We'll gather all those questions and hope to answer one of yours live on the air in our next mailbag segment, which will be Tuesday of this week. Also, go to StockChartsTV.com. That is our on-demand platform. So much fantastic content from a great group of contributors every trading day, even occasionally on the weekends. But if you're trying to make sense of these markets, we have a lot of smart people that are following these things, that are trading and analyzing them and have some wisdom to share with you. Go to StockChartsTV.com or on your mobile device, just search for StockCharts TV on demand. I want to continue on to our next segment today, shifting stocks. We started big picture, talk about this overall market environment, the S&P rallying off of the 3,800 level. Cryptocurrencies and some other risk assets still struggling quite a bit, though. In our previous segment, sector setups before the break, we talked about, what signs to maybe look for on the growthy stuff that has been struggling. We talked about the ARK Innovation Fund on Friday as an example of a potential bottom fishing candidate, as it shows a weekly hammer candle a couple of weeks ago. Now let's look at some individual names that are on the move. A number of ways we could go with this, and I would just tell you, a lot of the energy space sort of has been in wait and see mode, although the long-term trend has remained very strong. And when I'm looking at the chart of SLB, overall net, is this a positive chart or negative chart? If you gave me the binary outcome, one or the other, I'd have to say more positive than negative. And that mainly is because of the relative strength at the bottom. In general, charts where the relative strength is improving in any environment, probably a good idea and an area that you should be focused on. But if I had a third option, which is more neutral, I'd probably label the price action as more neutral, because you had the big move in the first, really since late November, early December. You had the rally January, February to make a new high in March. From there, that's been it. That March high, that big 2-day rally was pretty much it. And we haven't seen those levels before. We haven't gotten above $46 since. We've been more settling into this range around 44 on the upper end. We'll call it 38 on the lower end. What's really cool about these markets, and this was a John Bollinger trick that I remember learning many, many years ago, right? When you have an environment like this where something settled into a good range, this game is never easy. I would never label this game as easy, but I will tell you there are times when things are fairly straightforward and there's a clear conclusion that can be made and a clear game plan of what can happen next. We had the rally, so we had this consolidation phase through much of 2021 resolved to the upside, and we moved higher by quite a bit. We're now in the low 40s, and we've once again settled into this range. At some point, one of these levels has to break. We either get above established resistance on the upside, which we are testing as of today's close, or we get below the lower end and we start closing below 38, 37. So one of those things has to happen. We get above 44, 45, or we get below 38, 37. I would argue whichever one of those things happens, I would assume that the next move is probably the one to follow. That's the direction of momentum that shows you, at this point over the last 4 months, buyers and sellers are in equilibrium. We've all agreed that this stock is worth around $41 a share, and we've just been over and undershooting that value. That's right where the 50-day moving average is. But at some point, either buyers are willing to pay more or sellers step in to unload and find greener pastures elsewhere. That's when the chart starts to break. That's what I'd be looking for on the chart of SLB. Sort of wait and see mode, but really close to signaling an upside break. I mentioned with some of the banks, one of the better sectors today with financials, I think at the top of the list, if I remember right, to our market recap. We've had some interesting signs along the way here. So if you look at the chart of Citigroup, you can see lower lows, early April, mid-April, or late April, mid-May. Every one of those three occurrences have seen higher momentum. So overall, this is a bullish momentum divergence with lower prices, higher momentum. As of today, we're testing now the upper end of this price range, right? So closing above 54 would be a pretty nice follow through. Now, today we're closing above the 50-day moving average for the first time since late February. That's pretty meaningful as well. So we could be sort of setting up this rotation back to the upside. That's a really key chart to watch. The RSI right at 60, which is a lot of times where things stall out if this is a confirmed bearish phase. So all of that, changing would be an interesting inflection point potentially for Citigroup. You'll find similar types of patterns, although some different nuances on JPM, which we're looking at here. Bank of America, BAC. These are the mega cap financial names that I tend to review. An interesting one to pay attention to would also be Goldman Sachs. If you look at the chart of GS, had been sort of sideways there the second half of 2021. Then in January, the market's topping out, market's hitting a new high. Goldman soon after is actually breaking and gapping below the 200-day moving average. That had been the first time in about a year that it had been below its 200-day, and then look at these frequent retests of the 50-day moving average, every one of those failing, right? We try to get above the 50-day and fail. Happened a bunch of times. We're right there yet again. We traded up to the 50-day moving average today on an intraday basis. If and when something like GS can get above the 50-day moving average, like we talked about earlier with Citigroup, it's a pretty encouraging sign and what I'd call a change of character. Something's different, right? The chart has been telling you one message, which has been a downtrend below the moving averages. Does that change? That's why I think some of these bank stocks could be really interesting to watch through the course of this week. I get asked about Tesla plenty, and so I'll share sort of the general observations. You have to remember with Tesla, it reminds me of cryptocurrencies. These are huge price swings. So while this looks like a pretty orderly chart, granted a choppy one that's had a lot of movements, we have a range from 650 to 1150 just in the last 2 months, right? Like the last 6 weeks. That's the sort of range we've been dealing with. So there's been a huge loss of value here from Tesla, shedding 30-40% of its value just in that period of time. 700 is the level because that was the low back here in February. That's where we bounced a couple weeks ago. We now closed below that on Friday. You'd need to regain that level before anything else encouraging could happen, though. So, right, making a higher swing high, making a higher low. First things first, let's get above the previous level of support, and then we can start to talk about some more encouraging patterns for Tesla. I'm not seeing a lot to get excited about yet. I see a chart that's bouncing after a pretty good distribution day on Friday. Just quickly checking in on the FANG stocks, the FANMAG names. So here we have the FANG Plus Index, which has been in a downtrend for the last 6 months. Facebook stabilizing. Netflix arguably stabilizing, although I'd still call that a downtrend. You have a couple of these that have had a down move and are now sort of chopping around a little bit. With any of these charts, the first thing I would be looking for is a higher low. Amazon, out of all of these, may be the one to watch because you had the big sell-off going into about 2 weeks ago. From there, we've been kind of chopping around. Downtrends end when there's either an exhaustion of sellers or there's an influx of buyers, people willing to take a shot at Amazon at 2,100. You're starting to see signs of that because it hasn't really gone below that level. Do we get stability? Do we get back to a new swing high around 2,300? I would look for that on a key name like Amazon. We need to wrap the show, folks, and go to the 3 and 3. Let's go through 3 charts in 3 minutes that tell the story of this market. And here is chart number 1. Looking at Bitcoin, we talked in our market recap about the chart of Bitcoin. I didn't get to the chart of Ethereum, but similar sort of challenges where you have this really acceleration to the downside in the last couple hours. So let's focus on the big picture with something like Bitcoin. I think it's a key chart. I think about something like Bitcoin, and I look at how it's gone from almost 70,000 to 30,000 in just this short window of time. That's an 8-month sell-off and losing quite a bit of value. So it's come down quite a lot. What I've not seen are signs that it's not continuing in its downtrend. I think this is one of those charts that's guilty until proven innocent, as Brian Shannon would say, and JC Peretz was mentioning last week. Let's look for signs of stability and a sign of rotation higher. I'm not seeing it yet on Bitcoin, but this could be an important chart to watch. Chart 2, home builders, right? The home builder space, along with many groups, has been struggling. If you start the clock on January 1st, look how different this chart has turned from making new highs in December to really just cutting through all sorts of support levels, making consistent lower lows and consistent lower highs. I'm looking for a potential stabilization here. As you see a bullish momentum divergence, lower lows April into May, higher momentum in the RSI, a trend line taking the December 2021 high and connecting it to some subsequent highs. We're sort of still below there, but we've had an established low, which means one of two things happens. We get above that trend line resistance, or we break to new lows on support. That's why that's a good one to watch as well. That's the ITB ETF that we're looking at there. Finally, Zoom Video Communications, ZM, reporting after the close today. We didn't have a time to look at their earnings, but I would pay attention to where we're at. This is a chart in a downtrend. Stocks can certainly gap and change valuations around earnings. So very interesting to see what happens in the after hours and then tomorrow. But overall, the path of least resistance at this point appears lower. Folks, that's our show. Thanks for joining us on the Monday, May 23rd to recap all the activity in the markets. All of our previous episodes at StockChartsTV.com. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Have a great night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.